This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices sharply higher this morning. This directly linked to comments from two central banks. Basically, the European Central Bank indicated that they would continue with their very accommodative policies. Also, we had the Bank of Japan basically indicating the same thing. All of this seems to have helped stock index futures. In addition, though, we did have the consumer confidence report here in the U.S. coming in at its best level since 2008. So that has helped futures to make new highs for the day. It looks like these two statements from the ECB and the Bank of Japan are in response to what may be a scaling back of QE from the Fed, with comments made by Fed officials over the last couple of weeks. So this does look like some type of damage control from the ECB and the Bank of Japan. In any event, investors, though, looking at this very positively, and this has been the main supportive factor taking stock index futures higher today. Over in the foreign currencies, we are seeing some pressure in the yen. Of course, the statement from the Bank of Japan that they would remain accommodative, of course, is a very negative statement and a very negative influence for the Japanese yen direction-wise. It looks like we are very close to making new lows for the move. In fact, we're very close to a 4-year low in the Japanese yen. Also, we feel that interest rate differentials remain bearish for the Australian dollar. Even though the Australian dollar is a little bit higher this morning, I would expect these gains to be given back. So from here, look for lower in the yen. I think we will take out these 4-year lows in the yen, and I do think we'll see long-term pressure also in the Australian dollar. Over in the credit markets, additional pressure today. We do have a lot of supply this week. In fact, we have $99 billion in Treasury auctions this week, with today's auction starting with the $35 billion in notes today. Once these auctions are out of the way, I think that we will probably see the trend toward a weaker global economy taking over, and it is likely that by the end of the week we will see a rebound in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.